I'm Jiawei, the CEO of One Track Company. Today, me and my team will do a business proposal on our product, pullover sweaters. I hope you sit back and enjoy our presentation.
Good day everyone, my name is Yoon Seok-young and I'll be answering question 1. Describe the type of business we plan to start and explain why it is a viable business in the current economic environment. In today's fashion industry, many consumers prefer clothing that is casual, comfortable, and suitable for long-term wear. In response to this trend, we plan to establish an apparel manufacturing business that focuses on producing pull-over sweaters without zippers or buttons. These sweaters are simple, practical, and easy to wear while also fitting well with the current fashion preferences. Since clothing is a basic necessity, we believe this business has strong potential for profitability by focusing on simple and durable designs. Our products are able to meet consumer demand for comfort, functionality, and long-term use. Sustainable fashion is often described as an oxymoron because fashion trends change rapidly while sustainability emphasizes longevity. However, pull-over sweaters are well suited to bridge this gap, as they combine comfort with durability, making them more aligned with sustainable fashion principles. In addition, the rapid growth of e-commerce enables us to reach consumers globally while maintaining lower operational costs. This creates opportunities for new brands to enter the market more easily and scale their business efficiently. Overall, our pull-over sweaters manufacturing business shows strong potential for both sustainable growth and profitability, making it a viable business to venture into in today's economic environment.
Objectives of managerial accounting that would be important in the context of our business. Managerial accounting is the process of identifying, measuring, analyzing, interpreting, and communicating information in pursuit of an organization's goals. Managerial accounting plays a critical role in ensuring the success of a pull-up sweater business like ours by supporting effective planning, control, and decision making. So, during our planning stage, we need to consider the type of thread that we use in our sweaters. For that, we need to gain information on which type of fabric is the most popular and suitable in today's market. Then we need to consider how much cost there would be and have a rough estimate on how many pieces needed to be produced. Then comes one of the most important decisions, that is pricing, which needs to be carefully made based on all the informations available. We also need to make sure that the production plant is running efficiently, minimizing wastes and expenses. The workforce needs to be always motivated, for which measures like daily targets will be introduced by Warm Thread, which will encourage laborers to work efficiently. The management of our company needs to assess the market trends so that we get to know which styles are currently trending and what color or design is being sold the most so that improvements can be made. The knitwear industry is a multi-billion dollar industry and our biggest competitors are H&M and Uniqlo. However, to sell to our target customers who are the local Malaysians in this saturated market, we as the management will need to constantly analyze cost, pricing, and customer preferences to maintain competitiveness and profitability in the market.
Hello everyone, I'm Nusaba Tassin. I will be presenting question 3. For question 3, I will explain the amount of capital required to start our cotton pullover sweater manufacturing business. As a manufacturing business, we require fixed capital and working capital. Fixed capital of RM 225,000 is needed to purchase production-related assets such as cutting, finishing equipment, factory renovation, and basic office facilities. These assets are long-term in nature and are essential for efficient and consistent production. In addition, we estimate working capital of RM 250,000 to finance day-to-day operation during the start-up phase. This includes purchase of cotton yarn, workers' wages, manufacturing overhead, administrative expense, and a contingency for cash buffers. Since there is usually a time gap during production costs and receiving cash from customers, sufficient working capital is critical. Therefore, total startup cost required is RM 475,000, which supports effective planning and risk management.
Hi, I'm Ganjini. So for our apparel manufacturing business producing pull-up sweaters, we adopted a top-down budgeting approach. So in this method, the budget is set by top management and then distributed to lower level managers. This ensures alignment with the company's overall strategic goals. So we chose top-down budgeting because it allows for clear authority, faster decision making, and efficient implementation. It also saves time for lower management, allowing them to focus on executing the budget rather than preparing it. So, in preparing the master budget, this approach ensures that all components such as sales and productions budgets are centrally coordinated and consistent. However, limited input from operational managers may lead to inaccurate cost or revenue estimates, and this requires close monitoring. So, overall, top down budgeting supports strategic control, but it must be supported by variance analysis to remain realistic. Thank you.
Hello, my name is Siajawi and I will discuss how big data analytics can influence the budgetary process of my business. Big data refers to the enormous volume of structured and unstructured information generated every day by businesses. In today's ever-evolving technology-driven world, big data analytics has become increasingly important and plays a very crucial role. It has the ability to transform the budgeting process from a traditional static exercise into an evidence-based planning tool. By analyzing large volumes of data such as sales transactions, customer behaviors, production metrics, and market trends, in my apparel manufacturing company that produce pullover sweaters, big data analytics play a crucial role in the sales budgeting process. Instead of relying solely on past figures or managerial judgment, analytics allows us to analyze customer order histories and seasonal demand patterns. We have online engagement tracking in order for us to track all of this data. This enables higher accurate forecasting. For example, we can identify which sweater designs perform better during specific seasons, or we can detect the fashion trends, and we can adjust our production and sales budgets accordingly. Analytics improve budgeting by identifying patterns, anomalies, and trends that are often hidden within large data sets. This helps organizations uncover insights that traditional budgeting methods may overlook. With big data, companies are able to detect demand fluctuations and emerging trends early. As a result, managerial accountants can uncover patterns and tendencies, making proactive adjustments possible in response to market changes rather than just reacting when problems arise. By leveraging big data analytics, my company is able to improve the forecast reliability and adopt for a more strategic approach to budgeting. This leads to better informed decisions, improved cost control, and ultimately a stronger competition advantage. Thank you, and that's all from me today. I will pass it to my group member.
For question 6, I will now explain the master budget. A master budget is a comprehensive financial planning tool which integrates all the functional budget including sales, production, cost, and financial budget. In our case, the master budget is prepared on a quarterly basis to reflect the gradual growth in sales and production over the year. Now let's begin with sales and production budget. The sales budget estimates the annual sales of 12,000 cotton pullover sweater, the gradual increase across the quarter as brand awareness and market penetration improves. Based on the sales forecast, a production budget is prepared. Production is not only based on expected sales but also incorporated as an inventory policy of maintaining ending finishing good equals to 25% of the following quarter's production. These policies help to avoid stock shortage and ensure smooth production and scheduling. As the sales budget drives all the other budgets, accurate sales forecasting is essential for effective planning and control. Based on the production budget, several cost budgets are prepared. Direct material budget estimates the cost of cotton yarn required for production, including a material inventory policy of maintaining ending inventory equal to 20% of the following quarter's production need. The direct labor budget reflects the cost of labor that increases as production volume increases. Manufacturing overhead includes both variable costs such as utilities and fixed costs such as factory rent, and depreciation of production equipment. Depreciation is included to ensure accurate product costing even though it does not involve cash outflow. In addition, a selling and administrative budget is prepared to capture non-manufacturing costs such as administrative salaries, marketing, and depreciation of office assets. This ensures all operating costs are properly planned and controlled. Using the operating budget, a budgeted income statement is prepared, showing a net operating income of Rm 180,000, which indicates the business is financially viable. A cash budget is also prepared to track the cash inflows and outflows throughout the year. The cash budget highlights temporary cash shortfall in early quarters, which supports the working capital requirement estimated early. As depreciation is non-cash item, it is excluded from the cash payment. Finally, a budgeted balance sheet is prepared to present the expected financial position of the business at the end of the year. It summarizes the company's assets, liabilities, and owner's equity. Based on the master budget assumption, this allows management to assess whether the business has adequate resources and a proper capital structure to support ongoing operation. Overall, the master budget helps support effective planning, control, and managerial decision making.
When preparing the master budget, several uncertainties could complicate the forecasting of sales and expenses. Consumer demand for apparel is influenced by changing fashion trends and seasonal preferences, which may affect actual sales volumes. In addition, fluctuations in cotton prices due to climate conditions and policy changes, as well as uncertainty in labor costs caused due to minimum wage adjustments, increase the difficulty of cost forecasting. To assess our competitive position, we monitor our cost structure and pricing strategy relative to larger apparel manufacturers offering lower prices. Our target customers are local young adults and working individuals who value comfort, affordability, and practical everyday wear. These factors are carefully considered in our budgeting process.
Here I am, the business analyst, going to share an important matter. Warm Thread is considering to opt for activity-based costing. When we made comparison, we found out that traditional costing used broad, sometimes arbitrary basis, so product cost did not reflect actual resource usage. Warm Thread now considering using ABC to allocate the 360,000 manufacturing overhead more accurately, supporting pricing decisions that match true product cost and value. So me and my team have planned out the significant details in advance. First, we filtered out the needed cost hierarchy, and we decided to use unit level, batch level, and product sustaining level activities closely adapting to our budget. Then we allocate the 360,000 ringgit into cost pools so that it is distributed effectively. Of course, then we determine the cost drivers such as duration and transaction drivers, which are the causation factor affecting cost pools. Then we identify the total activity usage and overhead per unit. Let's dive into the activity-based costing table budget. So now we go back to the 360,000 that we already planned through our manufacturing overhead budget. Through that, we allocated the 360,000 into various activities, which we followed accordingly with the cost hierarchy, which are machine-related quality assurance, material handling, order shipping, design, and product development. And then after we divided the 360,000 according to these activities, then we detected the cost drivers, which we based on the transactional base as well as the duration base, such as machine hours, inspection hours, and more. So these cost drivers, after they have been detected, we have write the assumption of a reasonable amount that will happen throughout the year. Then we determine the pool rate by dividing the activity cost pool with cost driver quantity and blend it to this amount, cost driver per the unit hour or the unit times. And we know that throughout the year, we are producing 12,000 units. So we can just simply take the 140,000 and we divide it with 12,000 and we will definitely land to here, which is the activity cost per unit product. We can do the same thing as we are only producing one product line. So we are planning to produce more in the future since we are just a starting company. So we would like to produce one, and as a simple method, we can just straight away go to this. And we can do the same for all kind of activities, and we'll land to about 30 ringgit, which is equal to the traditional budget. So that's how it summarized the activity-based costing. Of course, we had few key assumptions in the ABC design. Each cost driver has a cause and effect relationship with its cost pool. Products consume activities, activities consume resources. Annual production remains at the 12,000 units and forecast driver quantities are reasonable for the year. Management judgment is used to select activities
drivers and pool splits, so figures are estimates a bit more decision useful. So it's still costing the same, about 30 ringgit for now. We are not going to adopt ABC first.
We hope that you will invest in our company. Thank you so much.